Hello everybody and welcome to Project Trade. This is the price structure show, and in this video we're talking reversal candles, the type of candle that when you take a look at its shape, you can see it, you recognize a higher chance than normal that a reversal in price is about to occur. Although reversal candles are singular in their nature, they do have to be contextualized to be utilized properly. Usually that context comes through determining whether the market has been in an uptrend or a downtrend. Two individual candles may look identical, but within different contexts they can be giving you the complete opposite trade entry signal. You don't want to start getting your buys and your sells the wrong way around, trust me on that. The key theory behind reversal candles is that a move of price, either up or down, has pushed itself to its limit of momentum and is therefore ready to turn around or at the very least stall. A reversal candle can be seen as the embodiment of this momentum stop and reverse move. The main visual check for any reversal candle worth its weight in salt is that the candle found a new extreme point in price but then pulled back to close in the other half of the candle to that extreme. Ideally it's a big pullback of much more than half of the candle, but essentially the open and close should occur in the same half of the candle. On one side of the candle's body the wick will be at least twice the size of that body, but on the other side there really won't be much of a wick at all. A simple and quick identifier is that reversal candles will look like the letter T or an upside down letter T. Here we see examples of two very generic reversal candles. The candle on the left is our bullish reversal candle because price finds a new low and then reverses and closes in the upper half of the candle, indicating a bullish turn for price, which is the opposite for our bearish reversal candle, where price have found a new high before turning around and closing back in the lower half of the candle. It suggests that momentum exhausts itself going to the upside and is now ready to reverse back down. The sellers have taken control of the market. It doesn't matter in the end whether the candle's price closes up or down for either a bullish or bearish candle, so long as that closed in the same half as the open. We are going to go more specific than the base reversal candle though, as there are a few different types of reversal candles, and as we've said, sometimes the same candle will mean two completely different things in different contexts. We'll divide our reversals into subsets of bullish and bearish reversal candles. For our bullish reversal candles, we've got the hammer and the inverse hammer. The hammer generally opens towards the top of the candle, makes a low in price, and then closes about 3/4 of the way up the candle. This is then inverted for the inverse hammer, where price opens at the bottom of the candle, finds a new high, and then comes back down to around about 1/4 from the candle's open near the low. They do have to be contextualized though. Not every hammer or inverse hammer candle is fit for purpose. Here's an example chart, and we are looking for a hammer candle, which we see down the bottom of the chart here, and you can tell how the candle came after a pretty firm downward move in price. It reaches all the way to a low which hasn't been seen for quite some time. Then it reverses to the top quarter of the candle for its close, and we can see that price does continue onward from that candle, mostly because we picked a chart where it would do that. There is no fixed amount of candles you need to see on the downward trend. The more the merrier of course, but there are circumstances where even just one or two candles coming down before the hammer hits are fine to go on. If you said for example that you have to have 3 downward candles before you could confirm a hammer candle, well your 3 downward candles might still not be more of a move than my 1 downward candle. It's not logic that means that you can't use a fixed amount of candles to confirm your hammer or inverse hammer, but you can see how that approach is not always going to work out perfectly. Hence why at the end of the day it is still a singular candle pattern. Now for the inverse hammer, where price is opening and closing in the bottom half or more of the candle with a noticeable wick, here's one nice looking inverse hammer which makes for a decent signal as price found a new low for it, and again we do get the move. The downward move had been for a few candles in a row, which is certainly adding legitimacy to the inverse hammer. Then getting the actual reversal, that's what brings it all together. It's still an inverse hammer candle if price continues on the downward move anyway, but it means that it hasn't worked as a reversal candle under those circumstances. Be aware that the shapes of these candles we're talking about, they are not uncommon to see in the markets. That's why it really is important to study the general price structure on the lead into the candle. We cannot rely on just seeing a single candle and then jumping into a trade regardless of what else is going on. Look at this set over here. We've got an inverse hammer followed by a hammer followed by another inverse hammer. None of them are setting a local low or high in price, so you could get in trouble thinking they're going to be a bullish reversal. Although in this example of course we do get lucky and the reversal does go to our favor naturally, but looking anywhere at this chart you'll be able to find plenty more hammer and inverse hammer candles that when taken on their own really aren't doing it. They need that downtrending context to prove the potential reversal as bullish. That's the bullish reversal candles. On the bearish side of things, we've got the shooting star and the hanging man, which are just the opposite numbers to the hammer and the inverse hammer. They are the same single candle pattern, but this time they need to be given the context of a market which has been on the rise. Here be an example chart where we're looking for a shooting star candle, and there's one, price finding a new high pretty up there, almost touching our title text, then back down it comes to close about the bottom third or bottom quarter of the candle. What do you know, we get the move and take profits somewhere near the bottom, because down here we actually spot a cheeky inverted hammer candle which is setting new lows in price, and we like the look of that. Being completely tuned in with the market, we switch our position over there entirely and get the goods going the other way, probably until that shooting star candle right before price goes off the screen. It's all winning trades. That's the takeaway here. Up next, the hanging man. Great name. This is the identical candle shape to the hammer candle, but this time it's at the end of an uptrend instead of a downtrend. So there is our candle right at the tippy top of the price move. The logic behind this is that the sellers were in control and then the buyers were able to push them off temporarily, but there are not enough of them to keep the push going against the sellers, and so the short side of the market take over once again, and this time for real. If we were selling off the market from that candle, we'd catch the nice looking drop that we can see on the very next candle. As Busta Rhymes may say, woo-ha! Those are your typical bullish and bearish reversal candles, but we cannot forget or leave out doji candles. Doji candles are recognized by having their open and close very tight together, ideally the exact same price. They are less contextualized candles than the previous reversal candles we discussed, and something we have to understand is that doji candles can as equally be interpreted as candles of indecision or uncertainty. It's not all about the reversal with them. And again, be aware of how many doji candles you are going to see if you are looking for them just on their own with no other criteria. It's already a bit dubious to base your trade entries off a particular candle shape, but checking for nothing other than a doji candle before you get in, it is going to be lethal for your account, and no amount of conventional wisdom as regards candle interpretation is going to save you from losing all of your money. Do not expect a consistent response from the market to a doji candle forming. That being said, there are 4 different types of doji candle that we can look out for. They are the long-legged, the gravestone, the dragonfly, and the 4 price. There they are. That's what each of them looks like. The long-legged doji in the top left with price opening and closing near the center of the candle. You're going to recognize it from that long upper and lower wick of the candle. That's candle of indecision where the bulls and bears are fighting it out, uncertain of which way they're going to go yet. That goes for the 4 price doji candle as well. That one's in the bottom right, although there's not a battle on the 4 price so much as price just doesn't move, opening and closing at a near identical price with no wick on either side. The gravestone and dragonfly doji candles though, those ones carry greater reversal potential with them. They match our general criteria where price has gone to a new extreme but then turned around and come straight back up the path, essentially closing back at the entry price and leaving a long outer wick in its trail. These could be seen as some of the strongest reversal candles because of the depth of that reversal all the way back. That's the basic doji candles for you. Try not to use them on their own, but if you can only handle one trading concept or indicator at a time, then get going with them. Now let's move to our trade entry signals. How can we use all these different types of reversal candles to assist us into our trades? Well, as the title and everything about the video so far suggests, these are reversal signals across the board. Where something is referred to as a bullish reversal candle, you are expecting a bullish move in price. So you could therefore enter a buy trade, and vice versa for a bearish reversal candle, you're going to be pondering a sell trade entry. Even without combining a reversal candle with other entry indicators or trading concepts though, there are still finer decisions to be made. You're on the charts and you see a sweet looking reversal candle and you feel as though your ship has finally come in. When do you enter though? You could enter immediately, so the reversal candle closes, confirming its existence for all eternity on the price chart, and you jump into your trade without a second breath. In you go. What else do you need? You don't have to do that though. You don't have to get in straight away. You could instead wait for a particular trigger, such as price moving further in the direction that the reversal candle is indicating it will go. If it was a bearish reversal candle, for example, you could set a sell stop order beneath the low of the candle. It's hoping that you'll get an extra added layer of confirmation that price is going to push in that direction. If price finds that new low, that's what puts you into the trade. Likewise with a bullish reversal candle, set your stop order above above the high of that candle, so you'll get into a buy trade if price pushes past there. Irregardless of when you are entering, it is going to be a reversal entry for your reversal candle. It's not just trade entries though, these reversal candles might be your friend when it comes to managing that money of yours as well. They can help keep the risk down a touch. If for example you were in a trend trade, you could use the appearance of a reversal candle as a signal for you to close down your trade. So if you're in a buy trending trade and you see a bearish reversal candle, maybe you interpret that as momentum stalling against your trend, therefore you would exit out of the trade. Flip it obviously for a sell trend move, you could shut down your trade after seeing a bullish reversal candle. Why take the chance? Sometimes it'll get you out right at the end of the move. And much like with the entry signals, you don't have to exit immediately. You could set a stop loss just outside the reversal candle to wait for that extra confirmation that the trend your trade is on, that is ending. Away from being an exit indicator, the reversal candle could also be used as a measure of risk. It's not really the best way of using it in my opinion, as you'd probably be better off just using the average true range indicator for a more balanced measure. It is there though if you did want to check the high to low distance of the candle when you're entering the trade. You could use that distance as a 1x risk. Potentially then you set a stop loss at the 1x risk distance with a take profit at the 2x risk distance. Bit of extra reward there when you do get a winning trade. You can then assign a capital amount of risk to that distance when you're calculating your trade's volume. It's almost certainly better than going in blind with one standard lot on every asset regardless of volatility or relative pricing. Money managed. When we are in the market staring down the charts, it doesn't matter what asset you're on, these type of candles, they are going to appear and they are going to appear regularly. Something to consider though is that as a general rule with these type of candles, the higher the time frame is, the more reliable the signal is. Using the 1 minute chart and watching price go to a high and then pull back is a lot less likely to indicate an actual reversal in price as compared to seeing it on a daily chart. At least with something like the daily time frame, you know there was a sustained push at the beginning of the candle that likely lasted some hours before a big push came the other way. You're just not getting that kind of reliability with a 5-second time frame. You should also be prepared for the reversal in price to not follow through purely based off of the candle. Even if you see it on a monthly time frame, they are being used in a counter trend fashion, and a lot of the time that simply will not turn out to be a full reversal. You might therefore find it appropriate to try to get out of the trade early, whether it's going in your favor or not. A move in the direction of your trade may after all only be a minor retracement rather than the full reversal you believed it to be. Try not to get caught out by that one. Very difficult stuff. In conclusion, if you are trading reversals or building a reversal based trading system, a reversal candle contextualized within the wider market price structure could prove to be a useful additional tool to clip onto your trading suspenders. Although a generic interpretation is to see a reversal candle as any candle where the open and low are in the same half of the candle, there are many different shapes and forms of reversal candles. Hammers, inverse hammers, shooting stars, hungmen, doji candles, they all have their minor differences to one another, but they are all unified together by the alleged pending reversal following their appearance. Whichever type of reversal candle it is though, let's reiterate that using the reversal candle completely on its own is extremely unlikely to ever yield consistent gains. Like many indicators and trading concepts, it is brittle on its own, but when used in combination with others, it can be strong, more reliable. Think of it as a team game like soccer ball. You've got your center wings, your right forwards. They're not going to dunk anywhere near as many field scores on their own. They must be working together, and you need one of those shot stopper fellas too with the bat. They are blocking the losing trades from knocking out the stumps. The point is that if you understand how a good sports team works, then you can understand how a good trading system works. That is it for reversal candles, but anyone who has formed an addiction to them throughout the video, you can root around in the description to find out more information on those cheeky reversals. And remember, any charts, images or examples that are used are completely pre-selected for showing how the trading concept may or may not work. It is extremely unlikely that you are going to set foot on the charts and find trades that work as well as our examples do. We do search long and far to be able to find those best examples, but that being said, we have traded reversal candles in live forward testing, and those videos will also be linked in the video description. Thank you for watching. This is Project Trade. I am Ferdinand Magellan's Compass, and there will be more.